Hello guys, how are you doing? Today we are going to continue from our last class. So we are still on market structure. Now, today we are going to be talking about the valid break and an invalid break. So now in market structure, we have some breaks that are invalid and we still have some that are valid. So now what is a valid break? In a very simple terms, a valid break is a type of structure break that occur using a full body candle and not a wick. Now, there are some times that the market will come up like this and maybe make a swing. Let's say the market is on an uptrend and you see something like this. The market will close here and just use wick. So a situation where the market breaks structure with a full body candle is what we refer to as a valid break, while an invalid break is a situation where the market breaks structure using wick and not a full body candle. Let me show you an example in the chart. Now, for example, look at this structure. Change this. Now this is a lower low and this is a lower high. This is a lower low. This market broke this place and this is a high. But instead of this market now to break this place using a full body candle, the market broke the place using a wick. You can see this is a break of structure but using a wick. Now this is not a valid break. A valid break, we say that it is when the market break using a full body candle. This is just a wick. So it is until when the market use a full body candle, that is when we say it is a valid break. So in this place, the market didn't break structure because this is just a wick. In the future, you are going to learn about liquidity sweep. Then you understand. So this is where the market actually breaks structure. This place here. This is where the market really broke structure because it used a full body candle and the candle closed right below the structure. So just note, that's the difference between a valid break and an invalid break. So we are still going to be talking about structure, how to mark your higher highs and your higher low, how to also mark your break of structure and change of character. So we won't stay much on that since we have talked about that in our previous class. Now, I want you guys to understand something. We are only going to be dealing with the major structure. Remember in our previous class, I talked about the major structure and the minor structure. Now, for this beginners class, we are only going to be dealing with the major structure. This is a major structure. This is a high. This is a low. This is a high. Any other thing that happened here, you know, in this part, you don't expect price to just go up straight. No, you don't expect price to go up straight like that. Okay, price will always do its thing. So everything you see inside here now like this is what we call the minor structure. But we are not going to be looking at the minor structure. We are only going to look at the major structure. So this. These are the major structure. I hope you understand. So we won't be looking at the minor structure. We are only going to be looking at the major structure so that we will not confuse ourselves. Okay? So let's start marking. I believe I've already taught us in our last class on how to mark your structure. This is a break of structure. This high is protected. Just know, if the market is on a downtrend, the market is only supposed to break the lows and not the highs. The highs are protected. So just know. Next, we have a break of structure here. The high is protected. Now, yesterday, we said that if the market eventually break this protected high. What does that mean? It is what we call a change of character, or you can call it a market structure shift. So in this point, this high is protected. In the second point, this high is protected. So we're expecting price to do something like this. We're actually expecting price to do something like this and continue breaking structure, so that we can mark this place as a break of structure. But eventually price didn't respect this place to continue the structure to the downside. And I told us in our previous class that whenever you see price, instead of rejecting a zone, price instead of that broke that protected zone, that is a great sign that the market is already changing character. Now from there, you know that the market, if the market is buying, it is no longer buying, it is now selling. And if the market is selling, it is no longer selling, it is now buying. I hope we understand. So this is the short form for a change of character. CH, change of. OF, that's this the O there, and the second CH is character. So change of character, church. That's what to call it. So now price have break this place. Now that's a sign that the market is no longer selling. Now we are expecting bullish movement. So now we are expecting price to do what? Since price have break this protected place, we are expecting price to do something like this and continue going up. Okay, so now if you were buying, if you were selling before, you now know that okay, it's time to stop selling, you have to start buying. I hope we understand. So price has break structure. We have a break of structure here. Now you guys didn't ask me a little question, what happened here? Now is this a break of structure? That's the question. Is this a break of structure? No, this is not a break of structure. Why? Because it is a wick. We can only call this a break of structure when the market use a full body candle to break. So this wick is not a break of structure. This is where the break of structure happened. Here, this zone here, where the market used a full body candle. So this was where the break of structure happened. These are simple things that will make you make a lot of mistakes in the market when you start trading. So just know, market structure, like I said earlier, is very important. It is very important, especially if you are an SMC trader. Okay, so the next thing I want us to talk about is time frame. You can see we also have another break of structure here. This is another break of structure. So later on, you should just mark out your structure like this. You just follow them one after the other, and the place where the market change character, you change also. If it change back to your trend, you change also. That's just how the market is. So you don't expect the market to be perfect. The market is never perfect. Okay, when you use your parts to draw, it look perfect, but when you are looking at structure directly, you don't expect perfection in the market. So just focus majorly on your major structures. Just focus majorly on your major structures, and later on you can start adding the minor structure. I'll do a class on that. So but for now, just focus majorly on the major structure and leave the minor structure. So every candle you see in the forex market actually represents a certain amount of price or a certain time duration. Now currently I'm on a 1 hour time frame here. You can see this 1 hour here. I'm currently on a 1 hour time frame. It means that every candle you see here, it takes every candle you see here 1 hour to form. This candle, this candle, this candle, whether it's a bullish candle or a bearish candle, it takes it 1 hour to form. Now, if you open your trading view app on your phone, this place here, this place, there's usually a time frame there that you will see. This place, if you click it, you see interval. You see 15 minutes, 30 minutes, 1 hour, 1 day, and so on. Now, all of these are all time intervals that explain price. Now, if I change this 1 hour to 3 hours, for example, now it means that every candle you see here, it takes it 3 hours for it to form. I hope we understand something. Let me remove this. Yeah, so it means that it takes every candle you see here, 3 hours for it to form. So if you go to your trading view and you click on that icon, you see different time frames. So it just simply means that every candle you see here, it takes it that particular time frame for it to form. Now, if I go to 1 minute, for instance, it means that every candle you see here, it takes it 1 minute for it to form.